Andrew Malcolm here from MortgageHq, and today we're going to dive into the data a little bit about what is going on in the property market for the end of 2022. So I've got July's information, some from CoreLogic, some from Tony Alexander, and overall what we're seeing in the market at the moment is a lot of negativity in the media, going online, reading the Herald, reading stuff. You're going to see a lot of negative stuff about property market, about the mortgage market, about inflation, and what I'm trying to do today is to convey messages from neutral database sources that it's not all doom and gloom, but it's important if you're going to be buying a property in the next 6 to 12 months for you to consider all the information that's out there, and that information that you are using to make your decisions is not biased. So we know that fear sells media. The news is a cycle of negativity and fear, and they're tapping into your neural sensors on what you should be avoiding, and that's how they get the clicks. If you're serious about buying your first home or about buying investment properties to build up your financial future, you're going to want to tap into data from CoreLogic, because they don't really have anything to sell you. They're just looking at the data, analyzing it, and they will do an executive summary, but you can still dive into the data yourself. So some of the recent CoreLogic stuff has talked about average monthly property percentage value changes. So this one that I'm looking at now has got percentage property value changes for May, and what you can see is Auckland is a relatively stable market, whereas if you compare that with Wellington at the moment, there's a lot of fluctuation. So it's important information for you to know that based on this data, it's a more of a stable place to invest in Auckland than Wellington at the moment. And if you look at what Tony Alexander is saying, is there's a big correction going on in Wellington at the moment. The important takeaways I took from some recent CoreLogic blogs and articles and data representations from July is that they've looked at the national property values over since 2003, and you can see that this trend line, even though percentage growth changes volatile over that long period of time, you can see that property values do keep going up. And what we can do is we can project out over the long term to assume the same thing. There's going to be troughs and peaks just like it has in the past, and if you deep dive even a little bit more and you flatten out the curve a little bit, you can see that since 2003 there's been a flat trend line, and what we've actually had is we've had in the last 2-3 years had a big spike. Now this is somewhat of a bubble because of what's happened in the last couple of years. More printing of money, less things to do, so people have been buying property and they want to live in a better house if they're stuck at home, so this has pushed house prices up. So it is totally expected in finance, especially around shares and stocks. We've got this reversion to the mean. It's a really important principle that suggests that over a long period of time you're going to see a trend line, but your investments are going to go like this. So the trend line is important to know, and this is why index funds have taken off, because they just invest across lots of different companies and they focus on the mean, saying, hey look, the way that you make less returns is you're trying to be too active in the market. If you just let the market do the work for you and you're invested in the market, then you get to share in the windfall that the market brings. So not buying a property is not the solution because you're scared of the market. What's important to know is where is the right place to buy based on what's going on right now, and to be in the market. So if you're a first home buyer at the moment, you might be looking at these property downturns in the past and learning from them and thinking, okay, even if there's a property downturn, I want to buy a house in Auckland. I don't want to buy right at the start of a downturn, but I understand that over the long term, if I'm going to be owning this property for 10, 20 years or being in the property game for that long, that buying at the beginning of a property downturn or towards whilst it's in progress is okay, as long as I can ride out the next 2 or 3 years, because timing the market is very hard. If you look at the early 1990s downturn, there's a short little not very volatile dip. If you look at the late 1990s, there was a big dip and then a big quick correction all within 18 months. And if you look at the late 2000s, it took 4 years to recover back to where it was. So nobody knows if this property dip is going to be 6 months or 6 years. That's impossible to tell from this point of where we are right now. The important thing to be is looking at some of the data from CoreLogic and not reading too much into the negativity. There's a lot of things that are causing a dip in the market at the moment. CoreLogic makes good mention of some of them. There's been lending restrictions, there's been classifications of lending change, there's been inflation, there's been a lot of pressure on the economy. There's many reasons why the property market is experiencing what it's experiencing at the moment, and a lot of it has to do because there's been a massive surge in values in the last 2 years years, that is very far away from what the mean, the average should be if you're projecting back from history forward. So my recommendation is definitely, if you're looking to buy property, don't watch and read into the media stuff too much, and certainly don't take your advice from somebody that's trying to sell you something. Don't take advice from people that are getting commissions related to the advice that they're giving you. Do I want you to buy property? Yes, we're in the mortgage game, but the reality is we're in the mortgage transactions game, and people are going to keep refinancing, they're going to keep buying properties. There's plenty of deals around for us at the moment. I don't want you to sit on your hands and miss out, because property values are at a point right now that you can make offers 100k, 200k below what you would have been making. If you just make a 2017 price offer now on a property, you actually got a good chance of getting it. And don't be afraid to dive into the charts and graphs that Tony Alexander, he's producing a lot of different content that's sponsored by different companies. This one's the FMT Regional Property Insights report, and you can see it is quite detailed, but it's not going to give you the golden answer. It's going to tell you where not to buy. Like if you're a property investor at the moment, if you're not an experienced investor, then investing in Wellington is a scarier prospect because there's a lot of volatility. You might want to be interested to read a little bit further along. For example, Queenstown, Tony makes mention that a lot of the demand for Queenstown property in the previous years has been from holidaymakers and tourists, and that has dropped off a bit. So maybe now is more of an opportunity in that area. So read unbiased information that is not trying to sell you something, and just don't forget that even though there's a property dip at the moment, it might be 1, 2, 3, 4 years until it recovers, but it will recover, okay? And if you're trying to time the market, what you might end up doing is having to buy here instead of here, and you're missing out on the privilege of owning your own home or the benefit of owning an investment property. So timing the market is dangerous. Time in the market is important, and as long as you pay the right price and you're willing to make offers that might have seemed like lowball offers a year or two ago, they're not lowball offers anymore. There's way less buyers in the market, there's a lot more sellers. Don't be afraid to make some offers.
My favorite thing about the workshop is how simple it is. So language is really easy to understand, so anyone with no property knowledge can understand what's going on.